The information in this podcast is educational and general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision. The company discussed in this episode was a personal investment of the host. At no point did the host invest client accounts or advise clients to invest in this company.
Hey everyone, welcome back to another episode of In the Market Trenches. Glad to have you back. If this is your first time looking at us, feel free to check us out at our blog at www.accretivewealthpartners.com. We're available anywhere podcasts are available. You can check us out at inthemarkettrenches.podbean.com. You can also check us out at snn.network. You can also check us out on the SNN YouTube channel. That's youtube.com/SNNwire. Gary, good seeing you again.
Good to see you too. How's everything going over there?
Good. You've been busy lately.
Been busy. I'm writing our client letter. It's hard to do it without going into, touching on the election and not sounding like we have a view on something. And also like some of the things that are going on and how we think they're going to unfold. It's hard to write it without sounding like I'm in the basement beneath a bare light bulb wearing a tinfoil hat. So it's. But,
I have a feeling I'm going to have a lot of editing that we're going to need to do.
Yeah, you and Stevie are going to have a lot of editing to do, I think. I've written some angry letters to the government in my day, and it just feels a little like that. So I think you're going to have to get out the big, the big Sharpie to mark it up.
That's all good. Happy to do it. Look forward to reading it. So for the name today, the Office episode where Michael Scott gets the vasectomy, and he talks about he snip, snap, snip, snap, snip, snap. Yeah, this is what I kind of feel like with this one. So
that's the dinner party, right?
That's the dinner party. The dinner
and
party.
And I had the vasectomy reversed.
Snip, snap, snip, snap.
Do you have any idea what 4 vasectomies will do to someone?
So I don't know where I stand after all this snipping and snapping. I think we're still in a pretty good spot with this name. What are we talking about today?
Well, we still follow it. So we're going to talk about Full House Resorts, which is a casino where based on the 1990s TV show, and Bob Saget actually greets you when you enter.
Is that true?
There's no. No.
With MicroCaps, anything goes in MicroCap land. Maybe you knew something.
We've seen some crazy stuff for sure, but it hasn't been that crazy. Although the CEO of the company, he sounds kind of like on the calls. He's great to listen to. It's like the greatest show in quarterly calls. I always listen to it, even when I'm not involved, just because he's so entertaining.
Dan when we
Lake.
first uncovered this one, that was a major attraction to this name, and now it kind of feels like Dan Lee is a bit of a celebrity in the microcap space today. I don't
in a way, right? We've been involved in this one multiple times, not presently involved, but always reserve the right to change our mind, and I suppose it's possible we get involved again in the future because we like following because the guy running it is so entertaining, and for a microcap company, it seems like when you get some of these small companies, a lot of times you get C and D and F level management teams, and this guy's he's a solid B plus or maybe even an A. I think in terms of what he's accomplished in the past. So we found this one. I think there was a Vic write-up on it 4 or 5 years ago. As we mentioned, like we said it before all of these, but like all of these things that we're going through here, these are the sort of a moment in time where we were involved. We had some thoughts and opinions. Those thoughts and opinions changed and evolved over time. And like we mentioned before, this one we were kind of in and out of a few different times. And, it's definitely created its fair share of opportunities and risks over the years. And I'm not sure if we've, I'm still not sure if I tallied up all the times being in and out of it, what the net result is, but definitely been an entertaining ride.
Yeah, for sure. So when did we originally come across this one? This was 2000. I was looking through so I woke up at like 4:30 this morning, and I started scanning my inbox for for the original write-up. And I think it was 2014 is when we started talking about this.
Yeah, that sounds about right. And we looked at this, and somebody did a really nice write-up on Vic, and it wasn't too hard for us to sort of look at it and go, huh. Well, there's clearly an opportunity here. This is a company that had like a long history. One point in time, Lee Iacocca was involved or whatever. And, there was a family that started it, and then there was the kid got involved, and I think that there was a lot of mismanagement over the years. And ultimately, this thing was probably on the brink of filing a Chapter 11. I think would be my guess.
Yep.
When these activists got involved, and they put this guy, the new CEO in charge. CEO's guy named Dan Lee. He was previously Steve Wynn's CFO at Wynn Resorts, and also is the CEO of Pinnacle, which was a success story in the gaming industry. And so the Full House Resorts is at the time we got involved, they owned 4 casinos, was it? They came to own a 5th one.
Mm-hmm.
One of them was in really rough shape because the expansion of gaming sort of really hurt the business for that particular casino. And they had one that was it was a decent it was a decent to pretty good property down in Mississippi. And then they had 2 in Nevada, right? Am I missing one? They had one in Reno and then one in Tahoe, right?
Right. Yeah. So those are the 4.
And so Dan Lee gets put in charge by the activists and sort of gets to work and cleaning up the balance sheet a bit and sort of trying to make the casinos run a little bit better. It doesn't seem like a pretty simple story. If you could if you get the leverage ratio right, it's sort of like, it was almost like a publicly traded private equity exercise where sort of you can sort of start to delever the balance sheet, and the enterprise value could remain the same, and you could, as an equity holder, that deleveraging would accrue to the equity, and that was pretty easy for how it would play out. And the multiple wasn't all that high, so like there was even a thought that like if there was real improvement and they did a few things that made the financials improve, you can get multiple expansion on top of it, and that it could really, really work. Let's see. That was the first time we got involved with it. That was sort of the general idea. At some point along in that first time, they bought a casino in Colorado. It looked like a pretty attractive price too, and there was a backstory with it. I forget what the backstory was. What was the backstory of Bronco Billy?
Did they do the rights offering to finance the purchase of Bronco Billy, or was that for something else? Because I remember that was a second bite at this one.
So that was, I think, a little bit later on. I think the rights offering, the purpose of the rights offering was to finance expansion at Bronco Billy. I don't think it was to finance the purchase. So we were involved in this a number of different times. The first time we were involved, I think we did okay and sort of moved on for a little bit. And then, we kind of came to be of the opinion that the properties that they had, there was only so much you can improve them, right? Like the properties were okay, but and management was okay, but
in general, right?
You're not you could do good business strategy, good balance sheet management, but you're not a magician, right? You can't take something that just isn't really going to work all that well and turn it into something that it's not. So at a certain point, we sort of moved on. And then after they bought the Bronco Billy, we were involved, I think, up until the point they bought Bronco Billy. And a little bit after that, I think we became less involved with it, right?
It just seemed like it was a good acquisition done at a good price, but it seemed like a little heavy lifting from there. And we weren't quite sure what the strategy was at that point. You continue to do roll-ups, are you going to lead to an eventual sale? And so I think then we either trimmed the position or we exited altogether. I don't really remember. But then I remember when they did the rights offering, that's when I became interested again.
Yeah, we took a second look with the rights offering, and we sort of started to get to know some of the people that were in and around this thing. So we got pretty comfortable that it was being run at least okay. But you know, when they bought this Colorado property, they thought they could turn. It's in a town called Cripple Creek, and there's only like I think really two areas where there's gaming in Colorado, right? One is Boulder and one is Cripple Creek.
Yep,
is that right? Yeah, and so the thought was that you know they could put a hotel in there, and if you go back and read the transcripts, I think Dan is talking about how he stayed. They had 12 rooms for a hotel there, so there really wasn't as much gaming that was going on there. It was like a day trip. It wasn't an overnight where you can really get the gross volumes up. And they they got approvals to do a hotel and like a parking garage and a few other things. So it's you know there was an idea that it happened, but it was a really big ambitious project, right?
Yeah. Well, he always had big ideas, big ambitious projects. If you read through the transcripts, if you want to know more about the regional gaming industry in general, he's been around the block a lot. There are a lot of creative ways to create value at these companies, and I felt like he was a really good operator of this little portfolio of regional gaming casinos.
Yeah, and they would try a lot of things. Like I think at one casino they had a Christmas casino where they literally had Santa Claus greeting people as they came in, and wasn't there another one where they had like $1 million?
Yeah, that's what I was going to say. You could take a picture in front of $1 million of cash.
It's just like interesting stuff, and so they would always tinker and try a lot of things. Like the Indiana casino, it was a riverboat actually, and it was kind of hard to get to, and so like they commissioned a ferry project, which I don't think that's worked out. Do you think that's worked out?
No, I don't think so.
No, but at least they're like trying things, right? Like if they're not betting the company on those things. But this Cripple Creek expansion, that was a really big expansion. So that after they bought it, we were happy. And then when I started talking about doing this hotel expansion, I think that was when we got a little nervous about it, and that was when we decided to sort of move on from it at that point. Which was kind of also weird with this one was, you know, every once in a while, a pretty notable money manager would get on CNBC and say it was like one of his favorite ideas. And this is like a low volume, low float thing, and the thing would just it would go pretty bananas for like at least a couple hours here and there whenever that guy did that. So like there were definitely like trading opportunities in this along the way. I don't think that we did really as much of that as we could have, but you know, the other thing about it was, so this project that they were going to do for Cripple Creek was very large in relation to the company and where the company's balance sheet was, right? And so we had sort of moved on from it at a certain point, and then was it a year or two later? I think it was like a year later. It was like 2016 or 2017, right?
2016 when they did the rights offering. I think that was August of 2016.
Yeah, so they did a rights offering, and Dan was putting his own money in, and so whenever we see somebody doing a rights offering, we always stop and take a look. And a lot of times these rights offerings, we think that they are, you know, sort of a way for management to load up on company stock at an attractive price. It's usually set to some discount to the previous trading period. And so even if you don't own it when the rights offering is announced, a lot of times people who are involved in these things, they'll finance their participation in the rights offering by selling the stock. So you have sort of this mechanical aspect in the market going on. So like rights offerings, we like them. They're a place that we commonly look for stuff. Anything I'm forgetting about this rights offering?
No, I mean, so he was going to, so he had already done some insider ownership and insider purchases on his own. He was going to participate fully on the rights offering. He was also part of, I don't know if it was a backstop party or if he was the backstop. I don't remember that. But anyway, he was going to be a part of the backstop, if not the entire backstop of the rights offering. And so just to build on your point, you know, this is a way for, if Dan wanted to go out in the open market and buy shares and increase his ownership, he couldn't do that reasonably without blowing out the stock price. And so the rights offering was a great opportunity for him to own more of this. They did it at a pretty decent discount to where it was trading. Yeah. And so he got a good price on it. All the shareholders got a good price on it if they exercised or oversubscribed on their rights. I don't think these are tradable rights. I think they're non-tradable. And so whenever there's a rights
No, they
offering,
weren't tradable.
sometimes, yeah. So sometimes the rights will be tradable and you could buy just the rights in the open market. This one wasn't. So you had to be a shareholder as of the record date to be entitled to receive those rights. But anyway, yeah, I thought it was interesting. Whenever you see an insider like that trying to get more of the more stock via rights offering, I mean, we always kind of take note of that, or it's just noteworthy. And so I think that was another go around that we had with this one.
Yeah, and then after that happened, I think they commissioned their project and what have you, and we were involved for a little bit longer. I think we were in and out of it again, and most recently we were in it last year. And what was that? That was the expansion of the sports gaming, right?
Right. Yep. So they got the sports gaming licenses, which basically solidified a certain amount of revenue to them, and they had to put up, I think, no capital for it. And so,
right,
super attractive. But they still have this kind of overhang of, one, they have to refinance their debt, and two, I don't know how they're going to fund this expansion, because that's still hanging out there. It was kind of put on pause with this whole pandemic situation.
Right. Well, with the pandemic, they actually had to shut down all of the casinos and basically almost mothball them for, I don't know, 6 weeks at least, and then, bring them back online gradually. So that really created some, there was some balance sheet risk to it at that point. But we got involved again around the expansion of the gaming, which I think was 2018, was it? I think it was 2018.
Maybe late in 2018, maybe.
18 into 19. There was the gaming expansion, and that kind of happened state by state. And a lot of the states stapled the online gaming rights or the sports betting rights to physical locations for a variety of reasons. And so when that happened, we sort of thought that there was, a way to get a pretty meaningful EBITDA lift with just this stuff coming online. And so that was our impetus for getting involved the third time. And then COVID happened. So during the course of COVID, I think we came to not be as involved, and we're not involved at all. And snip, snap a couple different times with it. And I would say that they managed COVID as well as I think could be expected. But then we sort of noticed some internal strife. The activist that's the chairman, they seem to be sort of squabbling with Dan. And I get it. So the risk is that they were going to go head first back into this Bronco Billy project without having their ducks in a row from a balance sheet perspective. And that's probably there's still some balance sheet risk to the company. So I don't think that that's a completely unfounded concern. But we're no longer involved with it at this point. Not to say that we under the right circumstances wouldn't be involved in the future, but it's one that we've sort of gotten to know along the way. Yeah. You alluded to these calls, these quarterly calls that Dan did. And it was almost like just this stream of consciousness from this really experienced guy telling you all this stuff. And he really showed you sort of how the sausage was made in the regional gaming industry. And they were very educational and also very entertaining. I think he, in one of them, I think he said, always an entertaining soundbite. Like in the Cripple Creek Casino, he stayed at the hotel, and he was literally, it was so old, he was looking at it wondering how many people died in this room. And he's saying this stuff on the call. It was just hilarious. Or how he was driving around shooting at birds because these birds are keeping him from getting his road paved. Just crazy kooky stuff. And the CFO kind of has to sort of, like you do with me, help him land the plane. But he's he's really interesting to listen to. What else do we got with this one?
Yeah, it's the internal struggles that are kind of the concern for me. It's chairman of the board, did some open market sales during the COVID time. I don't know. People can sell stock for all sorts of reasons. I don't know if he was trying to signal something to Dan. Frankly, I thought by this point they would have sold the casino. But I get it. There have been some setbacks along the way, but there's always some kind of setbacks with these things. They still need to take care of their debt. They need to refinance that. I think they got some covenant relief through COVID. But at some point that needs to be addressed. And still I don't know. I still think that, one of the best ways out may be to just sell the casino after they could take care of their cap structure a bit.
And some of the people may be sort of wondering why it was sort of snip snap with this all along, why we just didn't, sort of buy it and hold it. We're not normally trading a lot. And like when the period of time that we owned it, it wasn't a short period when we owned it. It was more like at least 6 months, usually a year, maybe a little bit more. But you're dealing with sort of a cyclical industry and a leveraged balance sheet. So you got to be, in our view, that's the type of position. Number one, we don't take for clients because it's small and we can't do it in scale for everybody. But number two, it's just not the type of thing that our clients are looking for. But we do have our own investing ventures here and there. And so this is a journey that we were interested in following and being involved in, and learned a lot along the way. But sort of the snip snap with it is just a function of the cyclicality of the business combined with the leverage on the balance sheet. It's the kind of thing that it's hard to sleep particularly well at night when you have that dynamic, right? And COVID really highlighted like the worst case possible scenario for this thing, which we never even really considered could happen. But a lot of things happened with COVID that I don't think anybody considered, possible before it happened. So, we not forecasting a global pandemic that closed the casinos for 6 weeks, and the capacity constraints of bringing them online and what have you. It's the kind of thing that, the kind of position we just feel like we needed to manage a little bit more tightly. And there were some times we owned it where we did okay, sometimes where we lost money. I haven't even added it up to know what the net effect of it was, but all of these are sort of our thoughts as we owned it sort of along the way, recognizing the risks of the cyclicality and the balance sheet.
Yeah, I think that's it. I mean, through the COVID time, and everyone was doing this with their portfolio, you have to make an assessment of how would a shutdown impact this company. Do they have enough cash on hand to weather the storm? And you have to have your own view on how long the storm would last. And when they are able to reopen, are people going to go to the casinos? Are they not going to go to the casinos? Are they going to spend the same amount of money? I mean, there's just a lot of decisions that need to be made. At a certain point, if you think they're going to survive, you're probably more, forgiving with your entry price if it's low enough. But yeah, I mean, you have to make an assessment of what the business is valued based on the environment that we're operating in. And so it's interesting. I don't know what the net effect has been either. I've learned a lot from listening to Dan, from following this one, learning about rights offerings, seeing how good leadership and good management can change a company. I mean, this originally started from a company that was beaten down and left to the wayside, and in came activists, a good management team, and they made a lot of good decisions. But at the end of the day, it's still regional gaming, and it's just a handful of casinos. So I think
like
for you us, said, you're limited what you can do.
Yeah, and for us, I think it was a toss-up sort of between. I think our view was maybe they shouldn't be trying to do this hotel project themselves, right? Right.
Is there someone else out there with a better balance sheet that should be doing this? I mean, that was kind of our thought along the way.
Yeah, that was sort of something that can sort of consistently nagged on us. And I think if you talk to people who have been involved in it and either are no longer involved in it or whatever, what their chief concern is sort of that whole project. But, Dan's also hit home runs in his career. I mean, he's done a few big projects. And so, it's sort of one of those things where I think they're kind of capital constrained on this one. And so, but maybe if the project's good enough, they can go get a partner or go get financing, and maybe that would change our view of it in the future. But as it sort of stands here right now, it's sort of just sort of something that we kind of loosely follow and keep tabs on and listen to the calls for entertainment.
Of course. Anything else at this one? Pretty much it.
No, I think that's it. I mean, you know, our wish when we went into it also, I think, was that maybe they would ultimately sell this to somebody, but you know, it's you know, that hasn't happened. So maybe that's part of some of the internal strife. I don't know enough about it to say that that's true or not, but you know, that's really all there is to this one. And you know, like I said, all this stuff these are our thoughts and as we went along in this thing, and it's just a moment in time. It's not a reflection of where they are today necessarily. And what else?
Yeah, I think that's it. You know, thank everyone for listening to us. Remember, check us out on our blog, www.accretivewealthpartners.com. We're available anywhere podcasts are available. Check us out at inthemarkettrenches.podbean.com. Check us out at snn.network. Check us out at the SNN YouTube channel. That's youtube.com/SNNwire. Everyone, thanks for listening to us. We really enjoy doing this. Gary, you want to close us out?
Yeah, if you rate and review us, it helps. And if you or someone you know would like to be a guest on our podcast, we always love stories. So,
yep. Thanks, everyone, and we'll talk to you soon.
The information in this podcast is educational and general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.